So, Mr. Garenesu, you are the one who is trading VIX10.
Yes.
Why do you trade VIX10?
Well, I think it's the one which is perfect.
Perfect for
I
what?
go to other like I always make profit when I'm trading VIX10. That's why I chose that one. Because when I go to VIX75 and others, all losses.
So how volatile is it?
It's not that.
Okay. Okay.
Plus I have small accounts, so that one is very
Okay. I hear you. It's okay. It's really important that you understand your instrument. Why are you really trading that particular instrument?
yes.
You actually need to know the reason why you trade a particular instrument.
That's
Yes. You don't just trade instruments just because it's an instrument. You need to have solid reasons why. So I hope we are still together. I hope we are still together. So I'm not going to complicate things here, because at the end of the day, whether you complicate a subject or you simplify it, the most important thing is for people to understand.
yes.
Yes, the most important thing is the results here. Even if you come to us and explain X plus X with the history to say, tell us where it originated from, and then someone comes and simply tells us X plus X is 2X. Both of you, you're correct, but the other one is taking their time to explain the same subject.
Yes. Complicating things.
Complicating straightforward matters. You know those teachers in school that just want to complicate a simple thing.
Yeah.
But say the answer, the X plus X is 2X. So this telling me who started this X plus X, I know, man. So that's the thing. Simplicity is always the most important thing here. So this is volatility 10, which we have been given by Mr. Garainesu there. So Mr. Garainesu said we analyze his VIX10, and he said he trades VIX10 because he makes profit there, and because he also said it's less volatile. Okay, it's fine. We're going to do that. So market structure is always the most important thing that you look at. Market structure is always one thing that you need to look at whenever you are looking at the chart. You need to simply, for example, the first thing that we always do when you are looking at market structure, we always look at first things first. We look at overall what are we really seeing. What are we really seeing just on an overall perspective before even drawing anything? What are we really seeing structure-wise? What are we really seeing structure-wise?
Can I ask you something? Which time frame are we analyzing? Day or 4 hour?
Okay. When it comes to analysis, you start from the daily up until you get to your entry time frame. Your entry time frame is simply there to guide you for your entry. For example, this one, I'm going to go as far as the entry time frame.
Okay.
Right. So here we are now. So first things first, as we spoke, this is we identify any form of any major trend lines, if ever they are going to be there. I don't know why it's doing like this, or why is it doing like that? Okay. These charts, I don't know why they act weird like this sometimes. Eh? Do they do like this on your side?
Sometimes
Okay.
if the network is a bit low.
Okay. Okay, so this is the chart. Right. So here we can start by identifying major levels of support and resistance. You don't even need to draw 1,000 lines here. You don't need them, because at the end of the day, if you can't hold a trade for a month, why do you need lines that extend to 5 months? So this area here, respected, this is a key area of resistance. This is a key area of resistance, that one. Then now, here as well, this is a key area of resistance. Then here as well, this is a key level of support, right? So I have those three. Let me see if I can add the fourth one here at the bottom. Right, this one I can draw it like this: respected, respected there, respected there. So we can draw it like that as well. It's also okay like that. It's also fine like that, because the more the number of touches, the better, and the more it's going to be respected. So if you look at VIX, VIX10, it had this sharp downtrend from there to there. Then after this downtrend, the market broke out of this major downward channel. So after breaking a major downward channel, immediately after that happens, above that downward channel, you're simply supposed to label already beforehand to say that is my what? My major buying zone already, before it even broke that downward channel. You're even supposed to label, so that even if the opportunity comes, you don't even miss, because you know that. So this was your major buying zone, major downward channel. Outside that major downward channel, you know that that is going to be my buying zone. So here, right, so here we are, downward channel, respected, up until we broke out, came back to retest, then went all the way. This was a clear buy. Did you even catch this buy?
No, I didn't.
This was a very, very easy, clear buy. Break and retest, went all the way without any problems there. So now, price, if you check price right now, it's ranging. Price currently is ranging after this push to the upside. So this is simply a push to the upside, pushing higher high, higher low, higher high, higher low, higher high, higher low, higher highs and higher low, up until we got to this range. Why are we calling this a range? A range is simply a moment where price is forming same highs and same lows, maintaining the same highs and same lows. These are the lows, these are the highs there at the top. So price currently it's ranging. And whenever we are ranging, we always buy the bottoms and sell the tops. Buy bottoms and sell the tops. Buy bottoms and sell the tops up until the break of the range. So here, obviously, we expect most probably price to break to the top side of the range due to this bullish pressure that happened before price got into this range. So however, right now we can see that already we're in a range. We can scale down to a lower time frame and identify any opportunities according to that particular range. So this is a range. This is a range. All these fluctuations that you are seeing, they're simply maintaining this range. They're simply maintaining this range. So here we are. Let's see if ever we can have any right. That's a trend line. That's a trend line that one can place. Because right now you need to identify now the opportunity in that range. The opportunity in that range. So that trend line, same thing that we saw there, above this trend line, that's my buying zone. I'm going to buy above that trend line. If you didn't buy here, the next buys, you get them above this trend line, because this is a major trend line. Respected, broken here, came back inside, somehow is back outside there. So already the 4-hour candle closed outside. So this was the break, came back to retest, gave us that little hammer there. So basically right now, price is simply in our buying zone when it comes to the VIX10. Price is simply in our buying zone. So in that buying zone, one can even apply a lot of factors, like you can even include your Fibonacci. The Fibonacci, we use it. It's a very, very special tool whenever it comes to entries. There on the 50 and 61.8, those are golden zones. Why do you call them golden zones? Those are very beautiful entry points. The 50% and the 61.8 Fibonacci. That's why you see there, I placed them in gold there, because whenever price is there, I know that is a very, very beautiful opportunity. Right now already I'm seeing a very beautiful buying opportunity. So whenever we enter based on our Fibonacci, the first target is always the 0%. First target is always the 0%. Then if ever price breaks the 0%, next target -27, third target -61.8. So TP1, TP2, and TP3, according to the Fibonacci. This is according to the Fibonacci. That is how we enter. Whenever we enter, we also consider that as our targets. Also looking and respecting levels of support and resistance as well. We don't ignore them. You realize that there at the 0%, somewhere, it's even close to this area here. Same as somewhere here. Right, so these areas, they're also key because they also can determine, so price can even come, push all the way. Then after breaking here, you realize that it plays around in this area before breaking that next zone again. So these zones are key as well. Very, very key zones. Right now, I'm currently seeing a very beautiful buying opportunity, but you simply need to go to a lower time frame. You simply need to go maybe to 1 hour, 30 minutes, and see any entry point, any entry point that is more accurate. Right. So on the 1 hour, I can see that already price came back inside, came back down, outside, inside, outside, respected, came back for retests. Already it's above the 50% Fibonacci. So we have this area here on the 1 hour. That is a level of resistance. This area is a level of resistance. Price is failing to close above this area. This area can also determine and give you the best buying entry point. You can get it using this resistance. You can get it using that resistance. So on the 1 hour, someone can even come here and place another Fibonacci. It's allowed. It's allowed to do that. If you check this Fibonacci, price bounced on the 61.8 and it still hasn't reached this 0%. So that is also another Fibonacci that can help someone for even the short term. You can enter after the break there of that resistance that we are currently seeing, because that resistance has power enough to even stop price to go higher there. So this resistance is key now. Key area. That's why it's very wise to scale down to lower time frames to see what is happening there before you just jump into trades. So already we have a resistance that is restricting price to go higher. Right, it's a resistance. If you check on 30 minutes, it's more clearer there. More clearer. But already you can see that market structure, we have higher lows, and our higher high there. This is a higher high. So here, after breaking here, we expect price to go and make a high that is higher than this one. Somewhere close to here. So this is 30 minutes. Already market structure is bullish, and already we are in our buying zone. Market structure is bullish, we're in our buying zone. Price bounced on 61.8 Fibonacci that we drew on the 1 hour. What we simply now want is price to break this resistance. Once it breaks this resistance, we jump in. Our stop loss just below the candles there. Either you put it here after the previous candle. So here, this one can even extend it all the way to there, because we spoke about this being a range. We spoke about this being in a range. So in a range, we expect price to go back to the top of the range. So here we're coming from the bottom of the range. This is the bottom of the range. This is the top of the range. That is the target. From the bottom, we go to the top. Top of the range. So that is what we are currently looking at. Top of the range, I think, top of the range is this one. I'm mistaken with this. Let me put these ones in a different color so that I don't confuse myself here. So these ones are not really the top of the range, but they're simply also levels of resistance along the way that might affect price as well. So the top of the range is this one. Price is coming from the bottom of the range. We expect it to go back to the top. It doesn't reach the top. So that is where we're expecting. So if someone just follows the concept of ranges, they can even push this TP all the way there. It's also fine, but looking into consideration, you also need to consider these levels of resistance along the way. You also need to consider the levels of resistance there along the way. Right, so already, I like what price is doing. I like what price is doing already. I like what price is doing already. It's breaking that resistance. So here you can even enter based on a 15-minute time frame. You can enter based on a 15-minute breakout. You can enter. There we are. There we are. There we are. There we are. So this is the resistance now. That is a key resistance. Once it's broken, in the next 5 minutes, someone can even, it's a buying opportunity, a very beautiful buying opportunity, this one. Very beautiful buying opportunity. So that is what we're currently seeing on your VIX10, Mr. Garanes. Do you have any questions so far?
Yeah, I think everything's clear.
Okay, I hope everything is clear to everyone. The way we broke it down from the daily all the way to the entry time frame.
So my entry should be after that small resistance there, right? After after the candle closes after that resistance.
Yeah, after the break here.
Okay.
You can immediately enter. You can enter after the break there. Your stop loss, you can even put it below there, slightly below there. If ever you really, because you said this thing is not volatile, you can even place here. You can even place there. Then we observe how price moves from there. But basically, this is what we are seeing on the VIX10. So the reason why it's called Smart Conference Trading 1.0, it's a combination of concepts. Simply combination of concepts. We combined everything. You saw the support and the resistance, you saw the trend lines, you saw the Fibonacci, and also you can even look at moving average. For example, one important moving average when it comes to entry points is the 50. This is the 50 exponential moving average. This is the 50 exponential. I like already where it is right now. So the 50 exponential moving average is also another additional confluence that one can use when it comes to entry points. It's one additional confluence that we use when it comes to entry points. When you see it like that below the market, most probably market is bullish time. It's now bullish time. It's now time. It's confirming to already the buying opportunity that we saw already. So it's simply an additional confirmation to what we are seeing already. You understand? So right now everything is on our side. The market structure is bullish.
Yeah.
On the smaller time frames, the market structure is bullish. On the high time frames, we saw that we're coming from the bottom of the range and we're going to the top of the range. We are also seeing that already our 50 exponential moving average is below the market. And we are also seeing some form of breakouts like this. This is a breakout currently happening now. So everything is on our side. Here, what can happen is price can even, the next candle can come and simply touch a bit, then boom, that can happen. But entering immediately after, it's also fine. You also be fine. So that is it for the VIX10. If you have any questions, you can ask. So finally, I think we can now move on to the VIX75. This one already, this one is going to be simple, a simple one, because already okay, let me just clear everything on the VIX. So VIX75 now, this one is my play. This one is my day one now. This one. Let me just not move things here. Okay, so this is what we currently have for the VIX. That's a major trend line at the top, touch, okay. Meaning the third touch is simply going to be a what? A selling opportunity. That one, you don't even need to think twice when it comes there. Gives a third touch, gives you a rejection, you enter on a smaller time frame, you sell. You don't need any thinking twice there. So that's the major one at the top. Then at the bottom, I identified that I have a major trend line from the bottom. Touch there, touch there, touch there. This is a major trend line ever since VIX was launched. This is a major trend line at the bottom. So price is almost there now. Price is almost there on that major trend line. So once it gets there, I need to see the reaction of price there. Once it gets here, because I don't want a situation whereby price will come, fake out, then come back inside. So here we simply wait. Once we get the rejection and we actually have the smaller time frame confirmations, we simply can start buying there. So now it's simply waiting time. Now I'm simply folding my hands, waiting for price to simply come to this area here and touch that trend line. Once it touches this trend line, most probably, according to what history is showing us, it can even buy hard from this area. Buy. Then once you see it breaking this downward channel, breaking outside, most probably the buying opportunities are simply going to increase to the upside up until maybe we come back for the third touch. So this is a possible obvious scenario that can happen. If not, if you see price breaking this major downward trend line, there most probably we are looking for serious selling opportunities to these levels of support that we have. This is the next level of support that I have. Touch there. This. So once price, if you see price breaking here, retesting there, I'm expecting it to push all the way to this first zone here. But it's a rare case scenario. But if it happens, it's fine. We're simply going to take the sales and go with it. But now, once we get the rejection to the upside and the bullish confirmations on a smaller time frame, we'll simply enter the buys and hold. So another thing that one can also look at before really considering holding buys for long, you can also look at the major time frame market structure. Market structure, we're simply referring to higher highs and higher lows. For example, this has been a bearish market structure from here, lower highs, lower lows, lower highs. Then here came in sort of like a range, broke out here. So now market structure, it has to start giving us a higher highs and higher lows, higher highs and higher lows, higher highs, higher lows. This can actually guarantee you that most probably now you can hold for longer. When you see market structure shifting, you can simply also look at it from the 4-hour perspective to look for that shift in market structure. So if you check now, ever since this drop that happened from that zone there, from that top of this range, this drop that happened, price never shifted market structure. Lower highs, lower lows, lower highs, lower highs, lower high, lower low, lower high, lower low. So even if it comes here, it's still a lower high because it's lower than this one. Lower low. Then once you see a lower high being broken, that is now a shift in market structure now. So far, this is what I'm looking at. If price comes straight to my trend line, I'm simply going to observe and take trades from there. Here, if it decides to come back to this zone, it's also fine with me because I will actually take sales back to the trend line there. So now it's simply waiting time for the VIX. It's simply waiting time for the VIX. Someone was asking, so should I take the buys or what? What I advise right now is the best buys are here on the trend line. The best sales here are going to be here. So it's simply waiting time. One can even go to a lower time frame and take some short-term trades. But those ones now, the risk is higher. And you also need to be very, very careful with those ones. Because price is not really price would not have reached any major zone to confirm those trades that you'll be taking. So this is also another channel that we are currently having on the 1 hour that one can use to enter short-term buys if ever they present themselves. That would be your support and your resistance somehow. Let's put it like this. Like that. So if you see price coming and breaking here, most probably it can give short-term buys back to this area here. That's where you can take some buys after the break of this channel. So VIX, that is what we are currently seeing. That is currently what we are seeing on the VIX. Any questions? Any questions? Any questions?
No.
It's all clear.
Yes.
Okay. So I think everyone, we are done with the instruments that you said analyze. I think we are done. So that is what we are currently looking at for these instruments that you gave us. So already you can see, I like what the VIX10 is doing already. So tomorrow, if ever, I know tomorrow is a Sunday, many people, they go to church. So we'll see after people are back from church, we'll see if ever we can also have another session and have a feedback of what we saw, what we analyzed today. We need to get a feedback at the end of the day. We need feedback. Yeah. Yes. So tomorrow Today, actually, it's today, né? Because this is 2 a.m.
Yeah.
Yeah, today after church, we will see the feedback to see how price has responded to our setups and our analysis. So I hope everything was clear, and I hope no one has a question.
Yeah, it was.
Okay, thank you. So I think we'll talk later on today. Talk and see how far price moved in response to the analysis that we have.
Okay.
Yes, so have a good, what you call a good morning. Is it a good morning or a good night?
Good night.
This is no longer night, Bella. Okay, good night, guys. I think we'll talk later on.
Yeah.
Good night.
Thank you.
Okay, see you.